Ross Tavel here from Remax Absolute. I hope you are having a absolutely fantastic day. Here today I have Tim McCarroll from RBC Mortgages. Tim is a mortgage specialist. You can find him at Carlingwood Shopping Center from time to time. Most of the time, though, he is running around, putting out fires, and solving, huge problems for everybody, because that is why he is amazing. Tim,
Thank you.
how are you doing
Thank
today?
you. Great. Thank you, Ross. How are you?
Yeah, doing well, thank you. Today I want to go over a bit about what's happening in the mortgage market, where the rates are, how hard is it now to get qualified, what's happening, what's going to be happening in the future. So, how's everything going, and where are the rates today as of June the 3rd?
June the 3rd, this morning, Bank Canada actually just announced that the Bank Canada will actually be yielding rates where they are, keeping them where they are. So they'll be concentrating on some other areas, obviously, of CRA, but they're going to be leaving them where they are. So rates right now, regarding most major lenders, I'm talking about A lenders. There's a big difference between A lenders and B lenders. But with A lenders, there's a big difference because of the fact that with A lenders, the rates are all under 2.75, easily under 2.75. It really depends on
2.75. That's a 5-year fixed rate.
Yeah, 5-year fixed rate. Usually around 2.25 for a variable. Again, that fluctuates depending upon lender you go to, obviously timing of the contract and so on and so forth. But yeah, definitely, it's obviously something to look at. But again, it really depends. You have to talk to each lender. But I can definitely let you know that most rates are, all rates are very, very, very competitive. You have to make sure you obviously understand the fact that all rates for the past century are extremely low. So that take advantage of, okay?
Okay.
It's not about...
Yeah, so how hard is it to get qualified for mortgage today? And what are the challenges that people are facing out there that you're seeing?
Yeah, so the biggest challenges I'm seeing right now is obviously the COVID-19, the pandemic. It's a little bit of different because obviously some people aren't working, some people are collecting EI or the Canadian Emergency Relief Benefit Package and so on and so forth. So what happens in my world is we actually do 2 applications. We actually do an application pre-COVID as to what actually you were generating, so on and so forth. And then we do another application after, basically now, as to what you're actually generating. So again, we go by total debt ratios, and our total debt ratio, obviously we want to make sure we stay below a certain percentage. But when you go to COVID pandemic right now, when someone's actually collecting EI or collecting CERB, unfortunately, it's raised the bar really, really high. So obviously, as someone who's good at doing what I do, I have to be extremely good at my notes, actually.
Right.
So my notes actually are page length of notes to my credit adjudication department, because I need to make sure, obviously, they have the proper notation to show the fact that there's reason, obviously, to give risk to this client, so on and so forth, because this is a temporary, and the fact that they're in an industry that will go back to where the case is. It gets a little more difficult when you're in certain industries, example like entertainment or restaurants, because we know that might be a little bit more of longevity. Example like a casino, what a case is. So it definitely takes a little bit harder, but we want to make sure we obviously showcase the fact that you have savings saved up, or the fact that you have access to some type of funds that you're able to actually use, and so on and so forth. So,
okay, so now I read in the news that the mortgage stress test went down from 5.04% to 4.94%.
Yes.
Some people may think, you know what, that's nothing, But when you look at it, like a $500,000 mortgage, it'll help someone to qualify for like a $550,000 mortgage, let's say. So, it might not sound significant, but it I think it is beneficial. So tell me, how does it affect you? And how is it actually going to affect, forget about you, how is it going to affect everyone out there? Even though you're a great guy, I still care about you, but what about everyone else?
Thank you. So obviously how it's going to affect most people is the fact that it actually gives them the ability to lend more and take out more. So in a way, it's almost like adjusting interest rates. When interest rates go down, we have the ability to possibly lend you more. But when actually happens, the rate goes down to 4.94 for the measurement. This was back in place for the stress test way back around 2009 when we actually went through a little bit of a recession back then. They brought this in because we didn't want to see us obviously go after our neighbors and obviously say repercussions. So they brought the stress test in, and they've been
And you're
lowering it
referring to our
because,
neighbors in the south, right, where they
oh
just were
yes,
giving out mortgages left, right, and center, and
you said it. So,
yeah, okay,
yeah. So basically what happens at one point was it's actually at 5.25, then went down to 5.15. But now the fact that the 5-year average has actually gone down a little even more,
right.
it's gone down to 4.94, which is really nice because obviously a 10-year average, the interest rates have always been under 4%. So it's kind of nice that way to be able to use that. So what does that mean in the end? It means the fact that we're able to actually lend more for our
Okay.
clients because they're
Very
able to say the fact that they're able to qualify for more because the longevity of an interest rate going over 4% or over 4.94% in the next 4 or 5 years is very low chance of happening.
Okay, so I've been reading in the news that the banks or the big six banks or all the banks have started to defer mortgages, helping Canadians who need help. So when I was looking online, I actually found some very interesting stats. $180 billion so far has been deferred or mortgage by the big six banks. So that
Yeah.
equates to about 14% of roughly the $1.4 trillion that is on the balance sheets for banks today. So that's about 720,000 people in total. I was just, doing some numbers on my own. That's a considerable sum. So, what are you seeing in terms of deferrals, and how does one qualify to, defer their mortgage?
Basically, mortgage deferrals are available to happen as long as you're not going past the amortization period that you first joined up for. I'll give an example. Let's say you moved into a house March 3rd, let's say, and you're a first-time home buyer. The maximum amount of amortization you could go to is 25 years. You will not be able to go past 25 years. Okay. But again, speak to your lender. It's always different. There's different cases, obviously. So that's very important to understand. Okay. To
Right.
qualify for it,
So that's the amortization period. And
yeah,
then what about paying it back though? I mean,
yeah, good
let's say
question.
it's
So
deferred. So do they have to pay it back still within that 5 years, or the bank's going to tack on a few extra months, let's say, at the end?
yes. So as I understand it, what's happening with the banks is the fact that if you're staying with the lender at the time of renewal, then it will be just added to the amount that you're actually renewing. If you are not staying with banks at the time of renewal and you are going to be going to a different place, then what's going to happen most likely is the fact that you will have to pay it back. Okay. The interest, I apologize, just the interest, not the principal. Okay.
Okay.
Because basically, in all nutshell, it's a contract. The contract for them to sign for 5 years, they're going to be guaranteed to make X amount of interest off of the contract. And that's what they've signed up for because you signed up for it.
A
If
financial
they obviously,
commitment, a
yeah,
very black and white financial commitment.
yeah, exactly. So you have the ability to actually know that this interest for X amount of months, let's say 6 months, is, let's just pretend it's going to be $3,000. I don't know exactly, but let's say $3,000. That will be tacked on to the pay and discharge fees because obviously that was the amount of money that it would to collect if you're moving to a different lender. If by any chance you renew with a lender, please speak to the lenders, but most likely they will add it to the actual amount that you are to be owing. So let's say you had an original mortgage of $250,000 at time of renewal. They'll add that additional $3,000 on top of that because obviously you haven't been able to pay it back, which is fine. It's okay.
Yeah.
The one big
You
thing
know
I want
what?
to make sure I
Okay,
talk
go
about
ahead.
just
Yeah,
really
one
quickly, Ross,
last thing. Go
is
ahead.
I just want to make sure people understand the fact that mortgage deferrals, there are good and there are bad. Okay. You have to be educated. With my bank, we are obviously taking the time to speak to every client, making sure they understand, answer all the questions they have, like these ones. Okay. Because again, it's particular per case, per application.
Okay.
But you want to make sure obviously you understand there are things you can do obviously with this with this opportunity to be able to take care of yourself. It's about security. That's what it really comes down to.
Yeah, of course. And
Yeah.
obviously things are working. I mean, $180 billion have been deferred so far.
Yeah. Yeah.
That's
Yeah, for
pretty
sure.
phenomenal considering that that's only been 3 months or just shy of 3 months
Yeah.
since we've had lockdown and, quite a few businesses have been shut down. Tim, thank you so much. I really
A pleasure.
appreciate your time. Again,
Yeah.
Tim McCarroll from RBC Mortgages. And honestly, thank you for bringing us up to speed on these issues. And actually, I think we look forward to hearing from you again. We should keep doing
Yeah.
this.
Thank you. Appreciate it,
Okay,
Ross. Enjoy.
everybody, be well out there. Have a nice day. Actually, have a fantastic day, and be well.